Good morning, and thank you for waiting. Welcome to the conference call to discuss Banco Santander Brasil S.A.'s results. Present here, Mr. Sérgio Rial, CEO, Mr. Ángel Santo Domingo, CFO, and Mr. Gustavo Sequin, Head of Investor Relations. All the participants will be on listen-only mode during the presentation, after which we'll begin the question and answer session, when further instructions will be provided. If you need any assistance during the presentation, please call the operator by pressing *0. The live webcast of this call is available at Banco Santander's Investor Relations website at www.santander.com.br/ri, where the presentation is also available for download. We would like to inform that the questions received via webcast will have answering priority. If you wish to ask a question via phone, please press *1. Once your query is answered, press *2 to leave the line. Each participant is entitled to ask one question. Before proceeding, we wish to clarify that forward-looking statements may be made during the conference call relating to the business outlook of Banco Santander Brasil, operating and financial projections, targets based on the beliefs and assumptions of the Executive Board, as well as information currently available. Such forward-looking statements are not a guarantee of performance. They involve risks, uncertainties, and assumptions as they refer to future events and hence depend on circumstances that may or may not occur. Investors must be aware that general economic conditions, industry conditions, and other operational factors may affect the future performance of Banco Santander Brasil and may cause actual results to substantially differ from those in the forward-looking statements. I will now pass the word to Mr. Sérgio Rial. Please, Mr. Rial, you may proceed.
Well, thank you very much. I would like to start by, again, thanking everyone. I would like to also give a welcome to Gustavo, who is our new Head of Investor Relations, joining us in this important call. And of course, our CFO, Ángel, will then take this conversation further with all of you. The reason why I'm here is to at least to try to provide some context for the news on my migration to the board. A couple of thoughts and premises. One, I'm not leaving Santander as a group. I remain very much committed to both Santander Brazil, but also to Santander Group. Second, succession has been really planned over the last 2 years. We had an extensive and well-thought process, very much linked with the local board and the group board, primarily also due to the materiality of Brazil and South America for the whole group. We had an extensive research, both externally and internally. I started the process since the day I joined the company as a CEO. So there were a number of names on the list. And then I'm very glad that as a CEO, but very much supported by the board, which is the board's prerogative at the end, the succession, I was able to actually indicate the person and the executive that I think will take Santander Brazil in a second phase. Mario has been part of the team for the last 4 years, part of the ExCo. I had the opportunity to test, see, observe, challenge, not only him, but also other potential names. And I'm very much convinced that on the back of his technical background, leadership style, commitment, and an incredible unlimited curiosity, let alone that he's got more ambition than I do for the business overall, I think I'm going to be leaving the organization next year in very good hands. We have a very clear process that until the end of this year, I am leading the organization, so there's absolutely no confusion whatsoever. And as from, I would say, probably more November, we'll start what I would call more of a gradual handover of the keys. but the process is clear. He takes over with Carlos Rey for South America on January 1st. And in the meantime, we still have a year to deliver, and we want to deliver the best year in the history of the company. And more importantly than this year is to create the base for a phenomenal, solid 2022. I think we have proven repeatedly that we are committed to profitable growth. I think we have proven repeatedly that despite regulatory changes, despite all the unknowns, we have been in a very humble manner, because we always say we don't know what the scenarios are going to be. The only thing that we know is that we got to be prepared to any scenario. So I think the cultural component of Santander is very, very strong. And I've been saying that from the beginning. Perhaps if there is a legacy that I leave, it's this big word which has become a bit of a cliche. But if there are certain aspects of Santander today, are its very clear cultural traits. And what would they be from our perspective? Speed, desire to grow, and focus constantly where are the opportunities for growth. You will see that as Angel explains what has happened in areas like credit cards and other areas like the distribution channels. Third, very committed to have constructive and difficult dialogue. We tend to deal with difficult issues in groups, in committees. There is a high level of what I would call intellectual honesty, perhaps not as much as it should, but the culture permits uh, people to actually disagree and provoke change. The other component of the culture, autonomy. I believe in autonomy. I believe in business units. You're going to see a quarter where GetNet is no longer in the balance sheet. It was a business that was successfully incubated inside of Santander. We certainly bought a platform a number of years ago, and we will deliver one of the strongest performance of the business relative to some competitors and even to the macro and the pandemic scenario. So the message to you all is we're going to have other chances and opportunities to explore uh, the change, transition, potential risks. I want to make sure that you all uh, at least hear directly from me that succession was planned. You actually plan your succession when you don't need to be succeeded. This reinforces the culture of being contrarian. Yes, we are contrarian. We tend to take sometimes not the obvious path, and this is exactly the best and strongest moment of the company over the last 10, 15 years. And that's exactly when you think and you should plan and put in place the right gradual succession. Key messages: I remain in the group. Mario has been part of the group. I'm not going to be an executive chairman, but I will not be a chairman of committees. So I'll be present inside of the bank. I will certainly help management to continue on the strategy. I think I can reassure you that there's going to be a high degree of continuity, certainly not going to be the same, hopefully be better, but certain elements of continuity being growth and elements of the culture will be certainly capped, because Mario has been, together with the rest of the executive committee, being a very important part of this construct. We're also adding André Almeida, who was formerly the CFO of Petrobras and a long executive inside of Vale for many years. She's going to be bringing a phenomenal experience in key commodity spaces for the executive committee, especially in a world where ESG is going to become so important. So to have someone not only with her financial acumen, but also her views around ESG and how she experienced it from a mining and fossil fuel industry will be really helpful for us to continue to position ourselves as a leading force in becoming and being an engine for economies of low carbon. Last, I would like to thank you all for following the story. I will remain again committed to the stock. My deferral remains committed in Santander Brazil stock. So I'm really pleased that I'm able to hand it over by the end of the year to a very high quality person. You're going to have the chance to see him next year more in detail. In the meantime, we still have a year to deliver to shareholders, and hopefully you will enjoy the conversation with our CFO and the numbers. We're really proud to deliver a very strong second quarter. We'll start it very strongly for third quarter and fourth quarter. You will see the best year of Santander in 2021, and Mario will do everything he can in an appropriate manner, and of course within the right level of governance. He will absolutely exceed everything that Sergio has done with my present executive committee. With all of that, remember, succession happens when you don't need to be succeeded. With that, I pass my word to Angel, our CFO, and please enjoy the call. I will disconnect, and of course, I will, depending what Angel and Gustavo then guide me, certainly happy to then organize a meeting with the sell side, with investors at the appropriate time during the month of August or in the early part of September. Once again, thank you very much. Angel, with you.
Okay, thank you, Sergio. Good morning, everyone. Hope you are doing well. What I will do from now on is share with you the presentation of our results, our second Q results, and then we will open, as always, the session for Q&A. So starting with the presentation in the first slide, on slide 4, the first idea is, we saw how Santander's integrated business system in Brazil, which serves over 50 million clients, reaching thousands of customers who use our platforms on a day-to-day basis, allows us to leverage business opportunities. Our channels receive more than 500 million visits every month. The auto platform alone, for example, which includes Webmotos, Santander Auto, and Santander Financiamentos, generates over 35 million monthly interactions. It's also worth noting the bank's initiatives and new businesses in open waters with platforms such as SIM and Dia or Toro, which will enable us to further accelerate the pace of customer acquisition and loyalty. So in the next slide, you can see the high volume of active or potential customers passing through our channels, which provides us with good growth opportunities. This is a growth clearly trend. We offer a comprehensive range of service channels from which customers can select the type of service that best suits their needs, whether it's digital, remote, physical, or external. We currently have about 17.3, a little bit more than 17 million customers who self-serve through digital channels each month. This has allowed us to increase our sales by more than 2 times over the last year, while lowering execution costs. In the remote channel, thanks to the new service models, we are already exceeding 300,000 sales per month, and it's just starting. Similarly, the physical channel continues to see a high volume of people and clients, non-clients in our stores, as we call them, our agencies, with over 50% of those 15 million clients and non-clients per month being potential businesses. We have also been expanding into strategic regions, the internal part of the country, that have shown a strong potential, in fact, for revenue growth. The external channel is comprised of banking correspondents and the bank's business verticals, such as Prospera, Ole Payroll, etc., which have been also experiencing steady growth and which I have presented you in the past of how cheap and profitable they are. In the next slide, I presented to you last quarter the different types of clients from the non-active after 90 days to the largely linked ones. There are 2 important points to consider here. Do we grow that client base? And do we move clients to the most profitable group, those more linked or loyal? And the answer to both questions is yes. The pace of customer acquisition increased by a remarkable 50% year on year. Our total client base grew 8% in 1 year. In the same period, our most linked clients group, this 7.1 million you can see in the upper part, grew 26% at a pace more than 3 times faster than the total client base. And finally, the full linked group, this 14.1 million, the adding of the first two categories, stands for 80% of our total revenue. So we strongly believe customer service is a differentiating factor, which is reflected in that NPS that you can see on the right side at almost 63 points. So, we spoke, in the next slide, we spoke about client growth. Now, let me address how we cope, technologically speaking, with that huge growth or with that amount of growth. We boosted our capacity, speed, and productivity to ensure that our technology initiatives were aligned with our ambition. The initiatives implemented will play a critical role in Santander's results in the future, particularly by shortening the time to market of new products and services. The wide-scale adoption and use of artificial intelligence and big data have already enabled us to increase the number of new processes and deployments. So this is a fact already. This is not a plan. We are already using those facts as a way of growth. And by the end of the year, 72% of our operations will be running in the cloud. In the next slide, you can see clients' growth in technology need also people. Regarding inclusion, women already make up 30% of our leadership positions and 26% of our employees are Black. We have already achieved the objective that we had for next years, with still a lot of room for improvement. As part of the collaboration process, we incentivize knowledge dissemination, with employees acting as leading figures. Training is key in our model. 3,000 courses, more than 70% of them being given by employees, by internal people. As a result of our actions in this field, we were recognized by Great Place to Work in both the human and the LGBT categories in 2021. And finally, the next slide, society in which we live. We aim, and I have shared this with you during the last 6-7 years, not just the last quarters, to contribute to the development of our communities. We have executed business-wise a total of almost 28 billion reais in green businesses. Apart from working with large companies on bond issuances and project finance, we are also expanding our presence in microcredit through Prospera, which ended the second quarter with a loan portfolio of 1.5 billion reais and more than 600,000 customers. Additionally, we have set specific targets to reduce carbon emissions, help with environmental conservation, and increase the use of renewable energy sources. We also give back to society by engaging in social initiatives such as the donation of over 200,000 food baskets in collaboration with our employees and customers. These efforts have earned us a spot on Exames magazine's list of the best ESG companies here in Brazil. And all that is also supported by part of our business. Our position as one of the best banks for large corporations is further strengthened by our leadership in the wholesale segment, as you can see in the next slide. We are Brazil's obviously only international bank with a full range of services. For example, for the 8th consecutive year, we have ranked as the largest Forex bank. On top of being a major player in infrastructure advisory and financing, having risen to the top 5 in energy trading in just 1 year, we are also becoming a benchmark for agribusiness with the largest agricultural commodities desk and leadership in green financing. So all this leads, in the next slide, to our strategy. So all what I presented to you is based on an integrated business platform that reaches millions of active and potential customers with a comprehensive channel offering. This fact, allied to the current customer experience that I already mentioned and satisfaction, has led us to deliver the highest quarterly net profit in our history, while maintaining our ROE above 21%. In fact, it's the second best return on equity on our history, the 21.6% you can see in the slide. Recurrence enables us to generate returns above the cost of equity on a sequential basis, steadily creating value for our shareholders and outperforming the Ibovespa, the local index, in the process. So moving to the numbers, the second part of my presentation, on slide 13, we detail our P&L that we have published during the night. Second Q21 figures do not include GetNet. This is important. Sergio commented in his introductory words, as the spin-off was approved on the last day of the first quarter. So what you are seeing is already with GetNet excluded from the numbers. We closed the period with a net income of 4.2 billion, the highest we have had ever reported for a single quarter, representing a little bit more of a 5% increase compared to the first Q of this year and 8% on a year-on-year basis. Let me highlight some key messages here. On the revenue front, NII was stable in the quarter and showed a slight increase relative to last year, reflecting weaker market activity in the period, but better client activity. Fees increased by 27% over the same quarter last year. Here, the customer base growth and higher activity boosted cards, insurance, and financial advisory revenue. And on the expense side, provisions stayed under control, in fact, stable on a year-on-year basis with a strong growth of the credit portfolio and rising in the quarter, more aligned with that loan growth. General expenses are increasing at a clearly lower pace than inflation and below the revenue growth, thus improving efficiency. Efficiency ratio at the level of this 33.8% that you can see on the lower part. This is our lowest ever, and probably again, as it has been during the last several quarters, the best in the country. Recurrence ratio reached a level of 92%, as you can see. Capital strong at 12.6%, the core equity tier 1 ratio, and return on equity, as I mentioned, 21.6%, being the second all-time high we have presented to you. On the next slide, it depicts the evolution of our NII, highlighted by, as I said before, customer NII, which advanced by 1.6% Q-on-Q and 4% year-on-year, with product NII benefiting from positive volume dynamics, as you will see on the next slide. Spreads, despite a slight increase, tend to remain stable or even recover a little bit as we go through the quarter, given the better mix going forward. As anticipated last quarter, NII from market activities has come back to a more normalized level. Advancing to the next slide, we can see that our loan portfolio grew by 3.5% Q-on-Q, and almost 15% year-on-year to these 440 billion reais at the end of the quarter. The individual segment continued to outperform, with mortgage and payroll loans bolstering growth. Consumer finance grew by 1.7% Q-on-Q and close to 10% year-on-year amid a challenging scenario for the automotive industry. SMEs had a good quarter, growing 6.5%, attributable to a recovery in demand. Corporate lending also performed well in the face of a weaker forex rate. Disregarding this impact, the portfolio would have grown by 6.3%. So the 4.2% that you see on the slide would have been 6.3%. On the deferred loan that you may see on the right hand of the slide, loan portfolio, it totaled 32 billion, indicating an amortization of 35% since in the last 12 months, since its inception, which I presented to you in June of last year. I remember to you that this was almost 50 billion at that point of time. The 15 to 90 days NPL, which I have also presented to you in different moments of time, reached 4.6%, which means an improvement compared to the previous quarter. In the previous quarter, that ratio, which is now stands at 4.6%, stood at 5.8%. Finally, it's important to note that 71% of the individual's loan book is collateralized. On slide 16, speaking about liquidity and capital, you may see that our funding has improved its performance in this second Q. Even in a more dynamic economic environment, time and demand deposits continue to show increases in their balances. Financial bills, on the other hand, increased quarterly but continue their downward trend on a yearly basis. We have issued some volume in the quarter to maintain a well-diversified funding base in the balance sheet. It had reached a too much probably low level in that sense. At the end of the quarter, capital on the right hand stood at comfortable levels, as I mentioned before. The BIS ratio almost at 15% and the core equity tier 1 at 12.6%. Moving on to fees, the brighter spots in the quarter were credit cards, insurance, and asset management, supported by customer base growth again, and more importantly, a stronger loyalty, the issues I addressed in my strategic slides. Cards grew by roughly 40%, 40, year on year, with higher transactionality and good turnover. Insurance went up by almost 30%, 28.7% year on year, thanks to a pickup in credit life insurance. And asset management, as an example, increased on the back of consortium and funds, consortium, the consortio, the Brazilian product consortium and funds, rising by more than 50%, 50, year on year. In the next slide, we can see how our asset quality has evolved. It remained at a good and controlled level in the quarter, with a high coverage ratio reflecting our solid risk management. As expected, given early year seasonality, short-term NPL improved by 30 basis points Q and Q to 3.3% on the red line in the upper part, which remains below our historical levels. The 90-day NPL kept a healthy and comfortable ratio at 2.2%, quite stable, as you can see historically, and even better than 1 year ago. With a coverage ratio of 263%, we believe that the current level of additional provisions on our balance sheet, which I have presented to you, of roughly 6 billion is adequate. You can also see that our loan loss provisions stayed under control, consistent with a cost of credit of 2.7%. Which is lower than in the same period of a year ago. This performance, again, reflects our diligent lending practices. And finally, recovery, that red small part you can see on the right bottom part of the slide, recovery continues to present levels above 700 million per quarter, which is positive when compared to the old levels, the 500 to 600 million range per quarter that we had in the past. The next slide shows how our expenses have performed. We continue to have a strong efficiency agenda, as in the last 5-6 years, which has contributed to keeping our expense growth below inflation. We had a 4% year-on-year rise in total expenses, well below the 8.35% inflation in the period, so it's less than a half of the inflation. We have conducted and will continue to conduct a thorough review of our expenses. This performance corroborates our commitment to productivity, operating leverage in the P&L, which led our efficiency ratio to improve by 80 basis points year on year to that 33.8% that I mentioned before, a historical minimum in that sense. At this level, I also mentioned that it is possible, as we have done in the last, for some time already, in the last quarters, that we remain as the best in the industry. So to finalize my presentation and final takeaways, moving ahead to slide 21, I would like to underline the following. Nothing compares to consistency. 6 years of profitable growth, and we remain focused for the next years. The commitment to developing a robust and complete financial platform resulted in a record level of new customer acquisition. Great business dynamics. The lowest efficiency ratio we have ever delivered, 33.8%. The second best return on equity we have ever delivered, 21.6%, despite the macro environment. A unique corporate culture deeply committed to growth, results, and society. Thank you, and now I open the floor for the Q&A.
Thank you. We will now start the Q&A session for investors and analysts. If any investor or analyst has any questions, they should be primarily sent via webcast through the questions button at the bottom of the platform. Please wait while we gather the query requests. I will now pass the word to Mr. Gustavo Sequin. Please, Mr. Sequin, you may proceed making the questions sent via webcast. It's important to do the reading of the webcast question, citing the name and house analyst.
So good morning, everyone. So our first question, we have a question from Gustavo Schroden from Bradesco and also from Thiago from UBS. Although the NII with clients expanded in the quarter, the net intermargin with clients decreased quarter over quarter, despite the stronger growth in lines with better interest rate. What could explain such a decrease despite the better mix? Do you believe that the NII with clients should improve in the upcoming quarters? Any color on how could the loan mix and NII evolve in the coming would be very useful.
Okay, thank you. I think we have two discussions here, which is the NII and the NIM. No, the NII, as was mentioned in the question, we are seeing good growth on the client side. So NII in absolute terms is growing given volume in terms of clients and given volume in terms of growth of the portfolio. I already presented that the credit portfolio is growing at about 15%, almost 16% if we exclude the forex impact. So that capacity of growth, those more than 600 new clients per month that we are achieving, those new almost more than 2 million clients that we will have, active clients that we will probably have by year end, etc. All that is continuously affecting the different lines of revenues and specifically the NII. So my guess there is that we should continue in a positive direction. Now, if we speak of the NIM, you have to consider how you obviously evolve or how you dilute or not your spreads going forward. And here plays a couple of things. It plays the mix, and it plays obviously the funding cost. No, funding cost has been rising, as we all know, given the situation in terms of the yield curve, etc. And the spreads we have. If you compare the spreads historically, we are at levels that are the same ones or similar to the third Q of last year, better than fourth Q, and a little bit lower compared to first Q. So we have stabilized that decrease of spreads that we have seen in the past, and even improving compared to third and fourth Q last year, which means that the trend is at least flattish, if not improving in the different products. We have products in which we are improving spreads, we have products in which we are stabilizing them. So looking forward, NIM will be pressed by volume because for the good, we have capital and we are deploying capital to that growth of credit. And at the same time, it will be to somehow diluted by that spread. I will see NII clearly on the positive territory, and NIM, it will be there, around flattish, depending on that final volume growth.
Thank you, Angel. So our next question comes from Pedro Leduc from Itaú BBA. Angel, can you discuss a little bit more about, first, your technology new initiative of concentrating everything in a separate entity from the bank? Is it going to only provide service to the bank or other companies like GetNet?
Yeah, we presented. Thank you, Pedro, for the question. We presented first, which is this new technological company in which we will be including around 3,000 direct employees and another bunch of external advisors or external forces. What are we trying to do? The first thing that we are trying to do is compete at the same level with what we could call today technological providers. Okay, I'm not speaking of competitors of the bank. I'm speaking of technological providers, and for that, building a new company in which you compete, as I said, in all senses. Yeah. You compete hand to hand to those developers, given the need for talent and the need for good professionals in that arena. We thought it was key. The second idea is that this company first will provide services as a data center, okay, for other companies. And why not in the future to sell data services to the market? So we will be building a new, profitable in the future, but very efficient in the first part, provider for the bank, but obviously leveraging that to the market in the future.
Thank you, Angel. So the next question that we have here is from Flavio Shida from Bank of America. Fee income come very strong in the quarter. Should we expect such a pace of growth in the coming quarters? Do you believe that insurance business and cards should continue benefiting in this line?
Thank you, Flavio. Well, you're right. I mean, fees are strong, but again, I would like to underline that they are strong as a consequence of what is happening in the bank. I have been presenting for you for several quarters already in years what our strategy was in terms of client attendance, NPS, in terms of attracting new clients, and in terms of moving clients from the less profitable to the higher profitable segment, obviously based on service and capacity of attending them. The NPS that I presented to you, the 63 or 62.7, the 63 points I presented to you, is close to the highest also. I mean, we have been moving in the last quarters in between 61 to 63. I remember to you that we started at 40, and we have been, last year we were throughout several quarters at the 50s, 57, 58, etc. So it is clear that the bank is giving better service. When you give better service, you gain more clients. And when you gain more clients and they are happy with your service, they use you more. So transactionality clearly improves. And this is how, and this is why you can see what, I mean, you said in your question. I mean, credit cards 40% year on year, insurance 30% year on year, excuse me, funds 50% year on year, credit operations 21%. But I will also underline, for example, current account. I have always said to you that current account fees should trend to suffer. And as you can see there, they are in the positive territory. Even considering the famous PIX effect, this new payment system that we have in Brazil, by which you can pay immediately to another person, and even compensating for that we are not in a part of our transactions, we are not charging the money transfer fees. Even with that, we have current account on the positive territory, again demonstrating that growth capacity. Now, going forward, again the same answer. We have clearly ended the quarter in a strong way in terms of clients and activity and transactionality. We are not changing that intention, so we will keep on, including insurance, in which you mentioned in the question, including insurance, which I believe is one of the good stories going forward for the next years, not next quarters. We believe that client growth and moving clients to more transactionality is a way of maintaining that high return on equity through fees.
Thank you, Angel. So our next question comes from Thiago from UBS, and it is related to our cost of risk. Angel, Santander Brazil cost of risk was 2.7 in the second Q 2001, which is below the pre-COVID level. It's fair to assume that the quality of the portfolio is better now than in the past, and the cost of risk should be structural lower than the pre-COVID level in the coming years?
Okay, thank you, Thiago. Yeah, you're right. I mean, the cost of risk is being maintained at low levels, or at an attractive levels. I think that, and I can speak of this as a fact, I think you will buy from me the argument that we have already showed it to the market our risk capacity. I mean, I don't think this is something for the future. This is already, Santander Brazil has clearly very good risk capacities. As I showed to you last quarter, we have the lowest volatile credit cost in the industry during the last years. It's not only again quarters, it's years. So that means that I would say we have to somehow control this part of the P&L. Again, flattish absolute numbers in provisioning with credit portfolio growing 16% adjusted by the forex, or 15%. Going forward, I always discuss with you. I mean, I think this depends on how our macro view is with respect to the country. If the country stabilizes with the degree of liquidity that has, with very good growth, I do think we are going to have a very good economic growth pattern in the second semester, for example. With good growth and again stabilized, I wouldn't see why the cost of risk should increase. Now, if the situation gets volatile, or not only because of Brazil, I'm speaking generally speaking, obviously confidence will go down and we could see some kind of marginally, I would like to underline marginally negative trend. But for the time being, we don't see kind of leading indicators that we should be worried about. We don't see deterioration. We see, I showed to you the prorogated portfolio, 50 billion 12 months ago, 35 billion now. So people are paying NPLs, both early arrears and 90 days NPL in that portfolio improving. So I do think that things are controlled. But I would link that answer to the macro scenario.
Thank you, Angel. So our next question comes from Yorgi from Citibank. Although the transition in the management had been planned for some time, the announcement was a bit surprising given Real's focus on as a chairman of the board and the group board. Is it reasonable to assume that this is a primarily due to care in the transition in Brazil, and that in the future he may occupy other executive position in the group?
Thank you, George. Well, you heard Sergio, no? I think it was absolutely clear. He's not leaving. He's not going away. He's staying. He's staying as chairman of Santander Brazil, and he will be absolutely involved in continuing the trend you have seen in the last years. So he continues as also member of the group's board. That as he has been in the last also times. He continues involved as chairman of Ebury, which is something, as you probably know, that the group bought also some time ago. He is also involved in the board of PagoNext, this payments holding company that the group is constructing, is building with GetNet also. So I mean, we could argue anything, but he's absolutely devoted and focused on maintaining what we have been delivering as a team, and I'm sure Mario will continue with that positive initiatives and positive ideas, and you will see that in the next years. Okay.
Thank you, Angel. Our next question comes from Brita from Autonomous. GetNet TPV is up 11% Q over Q, despite the meaningful change in active merchant, and the revenues are only up by a small amount Q on Q. What explains this dynamic? Maybe more business with larger merchants. What are the recent margin trends you see in the market? You have slightly rebalanced the funding mix. What is the optional funding mix that you would like to maintain the long term?
Okay, thank you, Rita. GetNet, I think GetNet, well, first of all, as you know, the operation has been approved by the central bank, the Brazilian central bank. Now we are in a process with the local SEC and the US SEC. And I don't know, but it looks like somehow by the end of this quarter, we should have it listed. It doesn't depend on us, the timing, but the best estimate that I have up to now is that one. GetNet is having very good trends. GetNet, first of all, what we have seen basically, or I would say due somehow to the pandemic situation, a little bit of a change of mix. If you remember, GetNet has always been like 60-40, 60 retail, 40 wholesale. And this trend has reverted in the last year to increasing wholesale weight compared to the retail. The objective is to again grow in the retail business. We have devoted external channel for that, etc. So, but I mean, the management of the TPV is key for us. We have several KPIs there. We have the TPV that you mentioned, and what we do, even growing in wholesale, is clearly managing that TPV. We manage the EBITDA margin. I remember to you that we are in the range of 58 to 60% in those in those last 2 quarters. That is 10 percentage points better than 12 months ago, which was 48%. But let me give you a couple of numbers. Amount of turnover, I was going to say, turnover growing year on year close to 80%. Anticipation growing year on year 90%, 90. Client base growing year on year close to 20%. E-commerce with a market share of 33% in the country in the first semester. E-commerce doubling, growing close to 100%, 99%. So, I mean, I think that the trends of GetNet speak for themselves. No, again, I remember you that the numbers you have seen from the bank are not in the second Q. Only the second Q do not include GetNet's number, and as it will be listed in the next weeks or months, you will start to have that information in a more detailed basis, coming from both Pedro, the CEO, Andre Parise, the CFO, or the investor relation team. Okay, Luciano.
The Q&A session via telephone is open now. 1 question per participant only. Please wait while we gather the query requests. Our first question comes from Mr. Jorge Kuri with Morgan Stanley.
Hi, good morning, everyone, and congrats on the great numbers, and all the best of luck to Sergio and to Mario in his new role. Can I ask a question about your NII growth for the next 12 months? It seems that the different parts that drive it are all moving in the right direction. You mentioned strong economic growth in the second half of the year, which should push credit up. The mix is improving. SME loans, consumer loans are growing faster than corporate loans. And then you have Selic rates, which are going up rapidly in what is likely an asset-sensitive balance sheet. So is it fair to say that we should see a strong acceleration of your NII growth over the next 12 months? And if you can help us quantify what that could be, would be very useful. Thank you.
Thank you, Jorge. You have 2 components in the NII, clients and non-clients. On the client side, you're right. I mean, we are seeing good volume growth, good client growth, number of clients coming in the bank. So, as I said, I would expect a client NII on a positive territory, and specifically if we do see what I said I expect. I expect the country to grow close to 5-6% GDP, and that would to be concentrated on the second semester. Always thinking that, as always, or specifying that the pandemic allow us to kind of have a normal life. But you do have the other side, which is the non-client side. No, I mean, I already mentioned in past quarters and specifically last quarter that the non-client part, which has come down to somewhere around the 2 billion. Treasury is going pretty well, but it had a very good first Q and a more normal second Q. And you have, again, what we always discuss around the ALCO portfolio. So with all that in mind, as you have seen, what was in second Q of last year, 2.6 billion has come down to 2 billion. No? So, and that is a kind of a gradual process, while we have gained close to 500 million reais on the client side. So those are two trends. Again, I always say to you, be aware of the volatility of the non-client side, but the trends, speaking of 12 to 18 months, should be a stronger client part of the NII, and probably it will depend on the volatility. I am not going to give an estimation here, but obviously being volatile, but having a non-client NII, which does not have a strong growth rates. Okay.
But so thank you for that. But how does that all add up? Is the expectation flattish combined NII over the next 12 months because one thing offsets the other? Is it to have double-digit growth? I guess what I'm looking for is a little bit more of the magnitude and quantification of the possible outcome.
I would say that the NII as a total should be in the positive, on the positive territory, not double. No, I wouldn't speak of double digit. I would say just positive territory.
Our next question comes from Mr. Marcelo Telles with Credit Suisse.
Hi, Angel. Hi, everyone, and congratulations once again on the great results. Well deserved. My question is regarding your lending appetite. I mean, clearly, you've been growing the loan book very nicely, and was particularly surprising to see this a big growth in the SME portfolio, growing more than 6% sequentially. And my question is this a factor of you increasing your risk appetite as per your credit risk models, or this is really the impact of you're keeping everything your risk stable, and it's just a matter of more demand for credit? So how should we think about your credit risk policies and risk appetite to the current stage? Thank you.
Thank you, Marcelo. I think it has to do again with that capacity of attracting clients more than risk modeling and changes on what we already had. I showed it to you in the first slides, the growth of clients. And when you have that amount of hundreds of thousands of clients going in, obviously you do have reflects on the several parts of the P&L and on the balance sheet. I would say that we have to differentiate here a little bit. If you remember, we have had a little bit of a kind of two phases in the last 3-4 years. A first phase in which retail individuals were growing a lot and corporates, etc., were not. That stabilized and even reversed last year, and specifically with the pandemic. A lot of the companies, corporates, increased debt significantly, not knowing what was going to happen, and probably to some extent in an excessive way. And that is reverting obviously 12 months ago or 6 to 18 months afterwards, as they realized that the situation is not as bad. It's not bad at all, but I mean, it's not as bad as they expected. So probably what we will see is more growth on the retail side, SME side, and smaller in the corporate, and by far much smaller on the large corporates, okay? Because of two ideas. First is competition from other funding points like capital markets or even the equity market. And secondly, when you start to have those type of growth rates, spreads tend to narrow. And as I have said before, during the last 7 years I have been here, is that we do not fight for market share. We do not fight for volume. We fight for profitability, and this is going to continue like that in the future. So if those kind of operations, or in the large corporates, given the competition from those other funding points, start to be narrow enough, we will just let it go, as we have done in the past, and I have shared this with you different times. So thank you, Marcelo.
Our next question comes from Mr. Thiago Batista with